I'm about to explain a simple but powerful idea in investing by playing a game of chance with you. Let's start with the rules of the game. You are in a game show and you have to select one of three doors. There is a car behind one of the three doors and there are two goats, one behind each of the other two doors. If you open the door that leads to the car, you win the car. The game starts now. You select a door. You don't open the door, you just select it. The game show host knows exactly which door leads to the car and which ones lead to the goat. So, regardless of whichever door you choose, the game show host opens one of the remaining doors that leads precisely to the goat and asks you the question, do you want to stick with your choice or do you want to switch? So, stick or switch, what would you do? Go ahead and record your response in the comment section below before you look at the solution. Welcome to a game of money where we learn how to make better decisions in investing, business, and careers. If you're new to investing and wondering where to start, or if you've been investing for a while but still haven't figured out a winning strategy, then this is a channel for you. I'll also keep posting some useful videos from time to time on entrepreneurship and career choices. Now let's look into the solution for our game. Since there are three doors, there is a 1/3 chance that the car is behind any of these three doors. Let's call these the old probabilities. Now, the game starts and you select one of the doors, which is indicated by the green tick symbol. Then the host opens one of the remaining doors to reveal the goat. This action modifies these probabilities as 0 for the door the host opened and 1/2 for the other two doors. Now, when the host asks you whether you want to stick with your original choice or if you want to switch, you take a look at these probabilities and you think to yourself, well, there is a 50-50 chance that the car is behind any of these two doors. So there is no difference between sticking and switching, so I'd rather stick or maybe switch. Is that the right strategy? Well, no. So what exactly is going wrong here? When you computed this 1/2 probability for these two doors, what you implicitly assumed is that the 1/3 probability that the car is behind the middle door got split equally between the other two doors when this door got opened. But that cannot happen. The reason that cannot happen is that the selection of this door is a past event and the host cannot go back in time to change that. All the host can do is to operate within his zone of control, which is these two doors, and to rearrange the probabilities between these doors. So when the host opened the middle door, the 1/3 probability actually gets transferred to the other door, so that the probability for the unopened and unselected door becomes 2/3, and the probability for the originally selected door stays at 1/3. So the conclusion is that the contestant should always take the switch, because there is a 2/3 chance that the car is behind the unopened and unselected door, and there's only a 1/3 chance that the car is behind the previously selected door. It still doesn't guarantee a win, but it gives you the best shot at winning. If that wasn't convincing enough, here's a more intuitive solution which will make it clear. Now, let's say there are 10 doors with just one door leading to the car and the other 9 doors, each hiding a goat behind it. After you choose a door, say door number 1, the game show host opens 8 of the remaining 9 doors which lead to the goat except, say, door number 7 and asks you whether you want to stick or switch. Now, you intuitively feel that the door that the host left closed intentionally is more likely to have the car than the door that you picked randomly, isn't it? So yes, switching is the smartest choice as it gives you the best chance of winning the game. A small request before going to the next segment. If you liked the video so far, please give it a thumbs up and consider subscribing to the channel. Here's the most important segment of the video. What does this game have to do with investing? It serves to illustrate an elusive concept called risk and how risk changes by acting smartly on new information. I call risk elusive because we have this contradictory preference towards risk at the same time. On one hand, we would like to take higher risk because higher the risk, higher the return. On the other hand, we want to lower the risk for a given return. In the game that we played, the return is a given. It's the car. When the game show host opened the door with the goat, what he actually did was to give you new information which would bring down the risk of the return by switching doors. Now, let's look at how investment risk changes with new information by taking an example. Let's take the example of Advanced Micro Devices, a computer processor manufacturer for PCs, servers, and graphics. The main competitor is Intel. AMD is the ticker symbol for its stock, and it was at an all-time low of $2 during end 2015. As of the time of making this video in September 2021, AMD is trading at approximately $100 per share, which implies a 50-fold price increase in 6 years. Was there new information that pointed to the changing risk profile of this company during the 6-year period? Let's explore. Let's take this market share comparison between AMD and Intel in the CPU market as a baseline and plot our story. Lisa Su was appointed CEO of AMD in 2014 at a time when AMD was in severe crisis. They launched two innovative products, Ryzen and EPYC, in 2017 for the PC and server markets respectively. Meanwhile, Intel has had three CEOs during the same time period, indicating leadership instability, and has had several delays to its product launches, thereby gifting market share to AMD. The AMD story over the last 6 years shows how a company can go from a high-risk, low-return investment to a low-risk, high-return investment, all the while giving out valuable information on the progress they were making, although indirectly, just like in the game we played. And the investors who were smart enough to spot that information and act on it at any time during those 6 years would have made substantial gains. Here's a bonus challenge. As you can see, Intel might have just started recovering some market share in 2021, and they have a new CEO, Pat Gelsinger, who understands the technology culture at Intel. So what do you think will happen to Intel and AMD and their stock prices in the next couple of years? Let me know in the comment section below. So the key takeaway from the video is this. Whenever there is a new information about a company, pause for a moment and think about whether it is fundamentally changing the risk profile of an investment in its stock. If you've watched the video so far, please give it a like. Also consider subscribing to the channel and click the bell icon next to it so you'll be notified whenever I post a new video. If you want to see more videos from the channel, you can click here or here. See you again.